So, hey, can I ask you a question?
Yeah.
When you tell people that you're a lender, what's the first thing that they usually say?
Do you think rates are going to go down?
Do you have your crystal ball handy when they
I
ask
do. It's
that?
in my back pocket. I pull
Oh,
it out and I'm like, turns out,
dang.
you're in luck.
I didn't even know you had one of those.
Yeah. It
You're,
comes with the license. They give you one.
oh, okay. We
Yeah.
don't get that in real estate.
That's why you
So,
need us,
there you
right?
go. Correct. Correct. What would be like the best question you think in that scenario that someone could ask you though?
If they're looking at buying a home, is now the right time for me to buy a home?
Okay.
Because we're not going to know what the interest rate environment is in the future. We know what it is right now. We know what it is in the past.
Right.
Everybody's holding on to those twos and threes. It's
Mm,
only happened once. It'll never happen again, short of a pandemic.
please.
The question is for your family right now, for your
Yeah.
lifestyle, for what you're trying to achieve. Does home ownership, moving up, moving down, does that make sense? Does it fit into your budget? Does it go with your long-term plans in life? Because no one really knows where the interest rates are going to go.
Sure.
We can all pretend,
Yeah.
but no one really knows.
Yeah.
So that's really the most important question is, does it make sense now?
So how does someone know that? Like, how do you help them figure
Mhm.
that out?
So there's a bunch of factors, right? So a bunch of questions that I ask are, what's your family life right now? Right? What's your home situation right now? What's your budget? Right?
Mm,
Because that's really important because I'm a big advocate of not making people house poor.
right.
I want you, especially if you have a family, I want you to be
Yeah.
able to go out, take the kids to Disney World, do your things, right?
Yeah.
How much are you willing to spend on a mortgage, right? How much money do you have to put down? All those types of questions. I really want to look at how much debt you have because I want to paint a holistic financial picture of what do your finances look like? Does home ownership,
Yeah.
and maybe it doesn't,
Right.
right?
Yeah. Are there times that you tell people that?
100%.
Because I know on
100%.
my end, there are absolutely times where I'm like, hey, actually, probably you shouldn't sell it right now if you don't
Right.
have to.
Right. Rent it
Like,
out instead, right?
yeah.
If that's a possibility,
Yeah.
right? Yeah, there's definitely times, people who are maybe high in debt,
Uh-huh.
it might make more sense to put a plan together to lower that debt load first. Now, sometimes you can do it by selling a home and using that equity to pay the debt off
Right.
and then using the remainder for down payment, right?
Mm-hmm.
Especially
Mm-hmm.
with people now, they have a lot of equity in their homes. But there's many situations where maybe, hey, if you're only going to be in a home a couple years, no, you probably shouldn't buy one. You should probably just rent one, you know?
Doesn't everyone kind of think though they're buying their forever home?
I do it
Yeah.
today. Today.
Wait, and I know you told me a story
Yeah.
about a lot of homes.
Yes. Yes. I've been in probably 10 or 15 homes and every single one of them.
Right.
This is our forever home,
Right.
right? And it's
We're not moving
like
again.
it's not your forever home. It's just not,
Yeah.
and I'm guilty of it as well,
Right. Right.
but it's the statistics say the average person stays in a home 5 to 7 years. Now,
Yeah.
I'm definitely below that, but 5 to 7. So realistically, even if you think it's your forever home, I'd go with the default,
Mhm.
right? What does life look like 5 years from now?
Yeah.
Hey, it's my forever home, but my kids are about to graduate high school and go to college.
Right.
Do you really need 4,000 square feet? Probably not. Probably not your forever home,
Yeah.
right? So it's just things to consider.
Right. When you're 60, are you still walking upstairs to your bedroom?
Right.
Because we're seeing on the real estate side, like building 2 stories, primaries are going upstairs again.
Uh,
And that's kind of like a
okay.
crazy thing because
Yeah.
Florida, I feel like, was always this like either single story or primary
Hmm.
down area. And we're starting to see that.
And I think that's younger type
Yeah,
homes, I guess,
maybe.
maybe entry level neighborhoods. I don't know if you do that in retirement communities.
Well, I mean, definitely not like 55 and over
Right.
communities,
Does it
right?
make it harder to sell on your end though, when
Well,
you're listing one?
so that's a great question because I actually just put one under contract that is that way.
Okay.
And I just feel like it changes my buyer,
Yeah.
right? So in my head, I'm like, oh, all bedrooms upstairs. That's going to be someone relocating from the Northeast or the Midwest because
Hmm.
they're used to that.
That makes sense.
Like up north,
Yeah.
that's just how it is,
Yeah.
So, or someone with smaller kids
Yep.
who wants to be by their kids, right? So in those scenarios, I think I just, in my mind, identify a different buyer.
Yeah. Okay. Yeah, that definitely makes sense. Which helps probably market the property a little bit differently,
Yeah,
you know.
yeah, for sure, for sure. I mean, who you're talking to.
Well, what are you seeing right now in the market when it comes to buyers, sellers? What are you seeing if you're listing a property, how many days are you typically seeing for it to sit on market? Because I know sellers right now, a lot of them were buyers from 2021 where You put an offer in without seeing the house for 30 grand over, you don't get the house, right?
Yeah.
Well, we're in a different market now, right? So what are you seeing when you're doing listings, mainly for people to kind of have realistic expectations? We're in a different market.
Yeah. So, I mean, here's one thing about me, and we've talked a lot about this, like privately. I will never buy a listing. I'm going to give you the hard news right up front. Like,
Yep.
I do business by the numbers. Real estate is still very much moving if it's priced right,
Right.
if it shows properly, if all of the things are in order. What I know that I know is that we're not in a market where you can just throw a number out there
Right.
and think you're going to get it. Everyone thinks they have the best house. Newsflash,
You don't.
they don't.
You don't.
I mean, you just don't.
You don't. Right.
Well, I get to see a lot of houses you don't,
Right.
So it's just you have to do business by the numbers.
Right.
We can't live on false hope. And when we do that, then it sells.
Yep.
But if I don't think that's realistic, or if I have a seller who isn't willing
Seems to
to
happen a
heed that
lot.
advice, it does.
Yes.
And I have no problem saying, listen, I don't think I'm the agent for you.
Right. Right.
Because, I mean, you get paid when a loan closes.
Correct.
I get paid when a house closes, right?
Mhm.
So I always say, like, I don't want my sign in front of your house.
Right.
Like, my sign in your yard costs me money.
Correct.
I only get paid when I take it
Correct.
out.
And 6 months on market's not a good advertisement for
Yeah,
you, right?
yeah, no,
You know?
that's a no for me.
Yeah.
So,
That makes sense. And I see that a lot. I see maybe sellers being a little unrealistic, but agents coming in and just kind of bending, if you will, and saying, hey, you want to list it for 30 grand more than what it's worth? Sure, I'll take the listing. Because the tactic is in 14 to 30 days from now, I'm going to call you and say, hey, we're going to need to drop that price.
Yep.
Right.
and I'm just, listen, I'm not saying I never have to have a price drop conversation. I
Yeah.
do, right? But that's not my MO going in.
Correct.
Because I do think you have one time to launch a house.
Yep.
Right. And you get that out there. And yes, people go through realtors and the listing gets stale and maybe it didn't
Mhm.
come out of the gate right.
Yeah.
And that's a different story. But you've got one time to get it out there. That's when you have the most eyes on it.
Right.
And when you start seeing price drop after price drop after price drop after price drop, it sends this message to people of either desperation. So now they're going to come in and really try to beat you up on price.
Yep.
Or what's wrong?
Correct.
Why isn't it selling?
Correct. Yeah.
So it's a tricky thing. It really is. At the end of the day, too, I know it has to appraise, right? Because you're
Right.
going to come in, your
Right.
people
You're
are
right.
going to come in, and they're actually going to tell me what it's worth.
Correct. And you know what's funny with appraisals is buyers think that the appraiser is there to ensure that they're paying a fair price for the home. That's not what it's about. The appraiser is there almost as an insurance policy for the lender, where they say, hey, if you're going to give $600,000 on a loan for this home, it's worth $600,000.
Right.
Because if it's not worth that, the lender's not going to give you more money than what it's worth for the loan guidelines. That's really the only reason the appraiser's there.
To
Which is-
ensure their investment, right?
Which is exactly why when you pay cash, you don't have to have an appraiser. Now,
Right.
I'm not saying you should or shouldn't, but you don't have to.
I kind of always suggest it.
Right.
Like, let's make sure your money is going to what it's worth.
Exactly. But yeah, if you overshoot the market, even if you put it under contract, it's probably not going to close at that anyways. It's a pipe dream.
I mean, you
And
can
then it
list your
creates-
house for whatever you want.
Correct. And if you get someone to buy it, you can get the offer, but you're just kicking the can down the road
Yeah.
of, okay, now what are you going to do? You're 3 weeks in. Now you got to renegotiate price
Yeah.
because the appraisal's 10 or 15 grand low, and it
Or
creates,
go back on the market.
which doesn't look good.
And then you got to explain why you went back on the market. So that's kind of it's not,
But
it's not
put
the
that
best
in the MLS
scenario.
notes,
Yeah,
right?
correct. No fault of,
Right.
you
Exactly.
know,
Buyer's financing fell
Right.
through.
literally, yeah. No fault of seller.
Uh-huh. Exactly.
So talking about appraisal, I actually do have a question for you.
Okay.
I know the appraisal, as we just said, is to ensure the lender,
Mhm.
right, in their investment. So I kind of always thought, because there are these times where as agents we get this, the appraisal has been waived.
Mhm.
Okay. Which is great news.
Great
All right,
news.
we're like, praise God. But I always maybe thought it was either the buyer's putting down, let's say, $200,000. They're buying
Mhm.
a $600,000 home. The lender's only putting out $400,000.
Right.
Well, they know the house is worth it.
Right.
Now, is it based on the amount that someone is borrowing, or is it still based on the value of the home?
It's loan to value. It's a couple things. It's loan to value.
Okay.
right? So the more you put down, the more likely you are going to have an appraisal waiver because
Okay.
it's less skin in the game for the lender,
Right.
right?
Because they will get their money out.
Right, exactly.
Okay.
It's debt to income,
Okay.
right? Like if I make 5 times what the mortgage payment is every month, the lender's also not really worried about me defaulting on the loan anyways,
Right.
right? Credit score.
Okay.
And so what you'll see is the very strong buyers with larger down payments. That's where you're going to see that.
Okay.
You're not going to get that on an FHA loan with 3.5% down. It
Right.
doesn't even exist on a VA loan. You're going to get that on those conventionals with 20, 25, 30% and more down.
Okay.
That's where you're going to see that on strong buyers, right? If you had a 620 credit score on that, you're probably not going to see it. It's those really, really strong buyers. And it's the lender. Don't get me wrong. They're still doing a little bit of back work, back in digging.
Right.
Is this realistic? Right.
Well, yeah, because I
You
mean,
know,
are they still protecting
they
the
are,
buyer?
they are.
Or are they
So
saying like, well, you put down 2/3, so it doesn't matter?
no, because still at the end of the day, right? If you have a loan that's 70% loan to value, because they're paying, let's say it's $1 million purchase, just because it's easy math,
Sure,
right?
sure.
They pay 300 down. Well, if you're 100,000 off on appraisal, they're not 70%, right? So the lender is
Right.
still looking on the back
Okay.
end. They have systems to say, okay, yeah, that's realistic,
Yeah, yeah.
right? So they're not just blindly doing it.
Tell me about refinancing. Because I know you have
Hmm.
we've talked about some cool systems that you're kind of
Hmm.
working on to make sure that people don't maybe miss opportunities.
Yes. So I take a unique approach to refinancing.
Okay.
Most lenders will call up a buyer and say, hey, I can drop your payment by 300 bucks, 400 bucks, right? Which is great. And there's really two types of homeowners depending on where they're at financially. There's the homeowners that in a higher interest rate environment, like we could kind of consider that now. Maybe you're getting a little behind on their debts.
Okay.
And what they can do is they can take maybe cash out and they can use that cash to pay off their debts. And really all you're really doing is rolling that into your home, but you're taking 20% at credit cards and putting it into a 6% mortgage, right?
Okay.
And then
But
there's
over 30 years.
over 30 years, there's your downside, which is there's a key to that too, right? And then there's buyers who maybe they're still doing pretty well, right?
Mhm.
And they can easily make the payment. Those are really the two people that I focus on. The buyers who just want to drop their payment, I try to convince the refinance client number two. And the reason for this is, as a lender, it is extremely easy for me to call you and sell you on, hey, I can save you $300 a month and you can skip 2 payments and the whole shebang, right?
Right.
Here's the truth though. With most refis, you're resetting the clock. So if you're 4 years into a 30-year loan, you're going back to 30. There are some lenders who will let you pick your term.
Yeah, yeah.
So you're saving 300 bucks a month, which is fine, but you're resetting that
Yeah.
10-year window,
Yeah.
right? What people don't realize is 50% of the interest, almost 50% of the interest that you pay on your mortgage is in the first 10 years. So when you're resetting that 10-year window, you're resetting all that interest you're going to pay.
Yeah.
And so even though your payment's less, you're actually going to be out of pocket more.
Yeah.
And they don't realize that.
This was a conversation in my house not long ago. We have a VA loan and we started getting all these,
All the stuff in the
all the
mail.
things in the
Yep.
mail. My husband is the guy who handles those
Hmm.
things, right? He shops for car insurance, he shops for cell
Hmm.
phone, right? Like, I'm like, yeah, have fun. And so all of a sudden he's talking to all these people, and I'm like, whoa, whoa, whoa. First of all, hang on.
Yep.
I have people.
Yep.
First of
Don't
all.
don't trust the people who send you the mail. Don't do that.
Right, like,
Yeah.
I have people. Second of all, he's like, "Well, we can XYZ." And I'm
Hmm.
like, "Okay, but what's the return on it?
Right.
How long am I gonna have to do that to recoup just the investment?"
Hmm.
And at the end of the day, what I was finding is I'm like, I don't wanna have that house by the time I recoup that. So
Right.
I'm actually spending more
Correct.
and not saving.
Correct. And VA loans, VA actually has a rule. It's 36 months. If you can't recoup the client's costs within 36 months, you legally can't close that loan. And they have alerts in the systems that'll stop you from doing it.
Well, so
Um,
I guess you just busted me. I wanna sell my house within 3 years.
well, there you go. There you go, right? Well, if you need a lender, I know a guy.
Yeah, yeah.
But what I like trying to convince clients to do, and it's harder because it's not the short-term sell, it's a long-term gain, is keeping your mortgage payment the same, but still doing the refi. And so as an example, let's say I can save you 300 bucks a month. and you go back to 30 years. Or we can keep the same payment, drop the interest rate, but you go to 20 years.
So take years off instead of dollars.
That is where you save the most money.
Yeah.
Now, you don't save it today, but that is where you save the most money on a refi, is getting rid of the time. Compound interest, it works both ways. So if you can shorten the term, that's where you save the most money right there.
Yeah.
And typically,
Makes sense.
you'll skip 2 months of payments, and lenders like to advertise that as some like magic perk. Every refi does the same thing. What you can do is you can take those 2 payments and pay it right back on your loan. And so majority of the time, the cost of the refi, when you take those 2 payments and pay it back on the loan, you're right back where you started,
Okay.
but you've shaved years off of your mortgage.
Yeah.
That's where you save the most money.
Yeah. Which, so I know it's totally not the same thing, but my brain, when you were saying that, went to like temporary buy downs
Kinda,
to help
yeah.
people. And I know it's a whole different concept, but that's just what entered my brain.
Mhm.
So can we talk about that?
Yeah, 100%.
Because I know rates dipped for a minute,
Mhm.
but now we're kind of
Kinda higher.
floating a little higher.
Yep.
And we live in an area where there's a lot of new construction.
Correct.
A lot, right? So we're competing with builders,
Mhm.
and we all know they have
So they do.
really
Really deep
pockets.
pockets, which, by
Um,
the way, a lot of times are priced into the home to begin
yeah,
with. But
yeah,
but if you're going to buy a new build, you might as well take the incentives
absolutely.
because
I mean,
you
I'll give
know.
you an example. I closed a home on Friday, and they lock them at 4.25 for 30 years.
Oh, that's huge.
I mean,
Never sell that thing.
today,
Yeah,
4.25. Are you kidding me?
yeah.
And gave them another $23,000 towards their closing costs, prepaids, all that.
Oh, that's
So
huge.
these folks on an FHA got in with only their 3.5% down
That's
payment
huge. And at 4.25.
at four and a quarter.
That's huge.
Like,
You can't beat that. You can't.
there's no seller that can compete with it. There's no lender, but
Hmm.
the builder has that deep pocket. Like, they buy the rate for millions of dollars of
Correct.
loans.
Correct. What they do is they go on the back end of the banks and they say, hey, and it's usually the big national ones. Hey, we're going to loan out $4 billion this year. And I'm completely making that number up.
Yeah, of course.
As a bank, how much money, if you're going to lend $4 billion, how much money do you need to make? And they'll say, hey, we need to make, I don't know, 40 million bucks, 50 million, whatever it is. They'll cut them the check.
There you go.
There's your 50 mil. Now, every dollar we lend, we can lend at whatever rate we want to because you've already made your profit.
And can they make money on it too?
They can. Yeah. And they probably will. They'll probably make a little bit.
Yeah. Well,
It
because
would
of
be kind of
course
dumb not to.
they sell it
They'll sell it to the secondary.
right?
Right. They'll sell it to the secondary market. Now, when everybody else is selling 6 and 6.5% rates and you're selling a 4.25, you're not going to get the same payout as the 6 and 6.5, but they've already factored that in.
Right.
The payout is in being able to turn their homes, right, and sell their
Sure.
homes. That's where they're making
Absolutely.
their money. This is just a tool that they're using to do it. They're not really looking at it as a profit center,
Okay.
which is why it's so low,
Mm-hmm.
right? So that's how they
Yeah,
do it.
well, and it's securing buyers for them. I mean,
100%.
for sure,
Yeah.
right? And even though, and you and I have these conversations openly because I'd love to still have people that talk to you about it, but you just can't touch it.
What I'll do is I'll say, hey, I'll tell them up front. Odds are I'm not going to be able to touch it. But what I want to do is make sure you're getting a good deal. Because if you're at 4.25 and they're giving you 20 grand, but your closing costs are 70 grand, not a good deal.
Right.
Right. So even if there's a 99% chance I'm not going to touch it and I can't come close to it, I want to at least put eyes on it for them and say like, hey, as a peace of mind from a third party perspective, you're good. Take that deal.
Yeah.
Right. Because I just think it's important.
Well, and that's one of the things I like working about you because you're honest and you're
Mhm.
building that trust, and I
Mhm.
feel like that can come back to you
It does.
in ways that, like, not that you're doing it for that reason,
Right.
but it just comes back to you because of the type of human that you are.
I appreciate that. I
So,
really do.
yeah.
That means a lot.
Yeah.
I get a lot of buyers that will ask me, I went and looked at this house with Amy and Amy says we should offer 550 or 600, whatever the number is. What are your thoughts?
Mm-hmm.
My thoughts are it's my job to get you the money once you make the offer. I don't know anything about what that house is worth. It's not my job to know what that house is worth.
Okay.
It's her job to know what that house is worth. And so if you're going to hire a professional, trust what the professional tells you. Yes.
Preach.
Don't go asking your mother, brothers, uncles, whatever. If you're going to hire a home inspector, trust what the home inspector tells you.
Right.
Because if you're not going to trust them, there's no point in hiring them.
Yeah.
There's no point. You might as well just wing it,
Yeah.
and I understand your mom who bought a home 15 years ago has her input. I get that. And I'm not even discounting. Well, I am discounting it. If you're hiring someone who is a professional in this industry who actually does volume and does deals and is well versed, trust what you're paying them for. That's why you're paying them. And so for me, that's a question I get all the time is, well, Amy says this. What are your thoughts? My thoughts are, I don't have a real estate license. That's my
Yeah.
thought. Now, if you want to talk money, I'll talk money all day long.
Yeah.
I don't know.
Well, that's kind of like I'm not a lender,
Right.
right? I know like this much. I know enough to sometimes say that it's not actually having the lowest number on the house as opposed to maybe using some of that money to have a lower rate,
Correct.
which will actually save you more money than an extra 10,000 off the house.
Correct.
So talk about that. Like
Yep.
what can $10,000 do to a rate?
Yep.
And let's use round numbers. Let's say we're looking at a $500,000 house, which I know
So
is
it's 2 points.
slightly below the median
It's fine.
price in St. John's, but
It's
it's
easy
round
math,
numbers,
right?
right?
Easy
So
math.
$500,000 house, and instead of someone saying, no, actually, I want to get it 490. What's the benefit if they actually bought it at five? Because it's worth it. It'll appraise,
Mm-hmm.
right? Because I do my due diligence before we ever talk about making an offer. I want to know as my buyer that I'm making a good recommendation for you.
Right.
But what can that $10,000 do for me on the loan?
$60. So if you're looking at solely just down payment, if you're comparing or purchase price to buying points, okay,
Okay.
and you're like, hey, I want 490 and I want $10,000 that I can use to maybe buy down my interest rate.
Okay.
Oh, I'm sorry, 490 with no money.
Yeah.
I'm just buying it for 490. I'll pay my closing costs.
Yep.
Your payment, not buying down the rate at all, is only going to be $60 less than if you bought it at 500.
Okay.
Now, if you get 500 and the 10 grand, I promise you I can get your payment past $60 a month lower easily.
And that goes over the life of
The
the
life of the
loan,
loan, the life
right?
of the loan. Or, you even look at, and I won't get this complicated with them, but time value of money. Money now is worth more than money in the future. Okay.
Okay.
But if you had 10 grand in 1950 versus 10 grand now,
Sure.
what's worth more,
Yep.
right? 1950, right?
The compounding we talked about.
Correct.
Okay.
So if I could have a home for 500 and have the seller give me 10 for closing, that's 10 grand in my pocket if I don't buy the rate down or anything. Now, yes, I'm paying an extra $60 a month, but I've got an extra $10,000 right now. What can I do with that 10,000? Right. So when you look at that, I can take 10 grand and make $60 a month on it easy.
Sure.
Right. That's not a problem.
Sure.
So there's a bunch of factors there.
Yeah.
But
I
at
mean,
the
you
end
can
of the
do that.
day,
How about a temporary buy down? Because I do want to talk about that. I think based on what I'm seeing, how quickly people sell homes,
mhm,
right? I am, and maybe you'll have a different opinion because
mhm,
again, I'm not a lender, but I think it almost sometimes makes more sense to buy the rate down for a short period than to pay to buy it down for the life of the loan. Because how many people keep that loan for 30 years?
none. The advantage too of a temporary buy down versus a permanent is if I do a permanent buy down and I sell my house in 18 months from now, and let's say it took me 5 years to make my money back, which is important to do a break even calculation, and I sell in 18 months, I lose.
Mm-hmm.
I'm done,
Yep.
right? Or if I refi because rates come down, that's really a better example. Temporary buy down. Let's say I do a 3-2-1 and I refi and I'm 1 year into it. The remainder of the money that was put aside for me for that goes to pay down my principal. I don't lose the
Because
money.
it's like a separate escrow
It is,
ish, right? Is
100%.
that the
Yep, 100%.
easy understanding?
Because you're not really buying down the interest rate. The seller is contributing a certain amount of money every month to pay your
It's your
mortgage. And mathematically, it's the equivalent of buying the rate down this.
Right, right.
So when they put that money in the account and you refi, whatever's left in there pays down your principal. You
I
don't
love
lose
it.
it. So
Yeah.
that's one of the huge advantages.
Yeah, I love that. And I always tell people like, hey, you want to talk to your lender about
Mhm.
that. Because I think we're in this area that attracts a lot of relocation. And we're also seeing a lot of relocation from
Well,
the
and I
area
see
as
a
well.
lot of people, they get in, and I might be one of them. I don't know. They get in here, they buy what they think they want because they're from out of state.
Yeah.
And then they're like, this isn't really what I want. And 2 or 3 years later, they're up and moving.
Yeah.
And they'll stay here,
Right.
But they won't stay, like, let's say if they bought in Silverleaf or Nocatee or whatever, and they're
Yeah.
like, hey, you know what? I don't like the tight neighborhoods.
Yeah.
Maybe that's not my thing, and I didn't realize that. Okay, well, 2 years later, they're selling the house and moving somewhere else.
Mhm.
So if you do a permanent buy down,
You just lost that
you lost
money.
your money.
I mean, people are having a hard time right now that are realizing that and are moving locally because they
Hmm.
bought 3 years ago and,
Yep.
prices were different, rates were different, like, they bought
Hmm.
higher
Yeah.
and, the market, it's stabilized. I mean, it
Yes.
softened a little bit,
Yeah.
but it's stabilized, and people bought high.
They did.
Like, I'll never forget because I only got into real estate after moving here.
Mm.
I was in HR, and I moved here with that in mind and then got downsized about 6 months after moving.
Good times, isn't
So
it?
it was
Good
great. Yeah,
times.
yeah, my
Yeah.
husband retired so that I could, like, have my career, and
Hmm.
it was great. He loved
Surprise. Yeah.
it.
Surprise. That's awesome.
Favorites. So then I got into real estate, and I'll never forget the very first offer I put in for a client. I wrote $80,000 over ask.
Were you sitting there going, what are we doing right now?
Literally.
Huh?
I was so nervous. I was writing my first contract. These folks didn't know that I was, like, brand new, right?
Hmm.
So, I don't think they actually still know 4 years later. They might now.
But they don't know,
Like, if
don't
they
hurt them.
see this, right,
Yeah,
then
yeah,
then they're gonna know, but 80,000 over ask. We lost.
Yeah.
We
Did
lost.
you an appraisal gap or no?
No.
That's why.
Yeah, no, but someone outbid us.
That's craziness.
Like, and then just because I can't help myself, sometimes I, like, watch things after they
Yeah.
close because, I'm nosy.
Well, yeah.
I mean, the house has been sold 2 more times since then, and that was only 4 years ago, so, like, let's talk about people moving,
Yep.
and both folks have lost so much money.
Hmm. You
Like,
overpaid.
that COVID market was
It was insane.
never a market
Mm-mm.
we could sustain,
No, it was
and I don't
insane.
want to. We can.
No, it was absolutely insane. And it helped to compound the problem we have now because the COVID market jacked the home prices up.
Yeah.
And then the rates went up, which, by the way, rates are average right now. They're not high. They're
Right.
compared to COVID. Yes, they're
Right.
high compared to the normal market. No, they're the normal
They're
market.
normal.
But when you take the home prices and skyrocket them due to COVID, now you get these pain points, right? And then you do get well, maybe I bought my house 2 years after COVID and I paid the premium and now these rates are where they're at and now I can't sell it for what I paid for it. And,
Yeah,
you
and
know,
and I've had some of those hard conversations, like, "Listen, if you don't have to sell, now might not
don't,
be the time,
nope,
right? Like, can we get you the rent that at least covers your mortgage? Can
right,
we minimize the loss that you're gonna take for
right.
a year or 2?"
Right. What it is, it's like you compare it and you say, okay, well, if you sold right now, what's the loss?
Right.
And I'm making up a number,
Yeah, yeah, yeah.
30 grand. Okay. If you rented right now, even if it didn't cover it, what's your monthly loss?
Right.
300. Well, you could rent for 100 months and match your losses.
Mhm.
So just write it out,
Yeah.
you know,
Because it will come back, it will
100%,
change,
100%.
and that's I'm sure, people ask you about rates. Well, I'm gonna wait for rates to come down.
Do that if you want to.
Right? Like,
Yeah.
so I call that, like, playing the housing market.
Yeah.
I feel like it's really hard to play the market. Like,
Well, you can't play the stock market. Every time you try, you get burned,
right,
right?
right. And so, like, if you buy low, you're going to sell low.
Mm-hmm.
And if you buy high, you're going to sell high, right? So
Correct.
all these people who made a crap ton of money in COVID and now
Mm-hmm.
have, like, their $1,000,000 house that they paid $300,000 for,
Right.
right? There's a lot of them in
Yeah.
Nocatee.
Yeah.
Let's
Yeah.
go, right?
100%. Yeah.
So Durban, a lot of people, they sell now and they cash in. Well, they're not buying again at 300.
They're buying at a mill.
They're buying at a
Or
mill.
let's be honest, if they still have kids, they're probably upgrading. And now they're
Right.
buying at 1.2, 1.3,
Right.
1.4.
Right.
Right now, the only way I could see it helping is if you go empty nester and now you're going from the mill to the 600,
Yeah.
maybe that. But for most people, that's not the case.
Yeah.
You know?
Yeah. It's like you're just kind of shifting it,
Yeah,
I feel
exactly.
like. So I use the whole plant a tree theory.
Hmm.
Like, when was the best time to plant a tree?
Yep.
Right. Well, the best time to buy a house was probably 10 years ago,
Hmm.
right?
Yeah.
5 years ago, even.
Yeah.
The second best time is now. If
Right.
if the situation is right for you,
Correct.
right? Like,
Well, and then you have the counter argument where people will say, oh, well, what about 2008? Okay. If you bought a home in 2007 and you paid top dollar, and the market crash in 2008, how much money have you made today if you kept that home?
Right.
It's about the longevity of it,
Correct.
right?
Right. Which is just like your 401k, right?
Exactly.
Like it's going to go up and down.
Exactly.
You're going to, but at the end of the day, it's a long game. Real
Right.
estate is a long game.
100%. And the downside to waiting too, right, is people say, oh, well, I'm going to wait for the rates to come down. Okay. You and everybody else. And what happened last time the rates went down? Even if they don't go to 2 to 3s, let's say rates go to 4.5 or even 5. How many buyers are going to call my phone? Hey, I'm ready to buy now. The rates came down. Now do that with every loan officer, with every lender across the entire country.
Yeah.
You're going to be, hey, I'll give you 30 grand more than what you're asking.
Yeah.
So what happens is you wait, you're going to pay more for the house when that boom comes. And if you're okay with that, you're okay with that. Or you can buy now. Yeah, okay, the rate's not great. I understand that. I'm not discounting. But when the rates go down and everybody else is panicking,
And
you
paying
can just,
more.
right, and paying more, you can just refi, lower your payment based on the dollar amount that you had before the prices went up. And now you've got a lower payment and you've got equity.
Yeah.
There's this whole concept in life where lack of action is action, right? And most of the time, the regret in life doesn't come from, I took action and made a mistake. It comes from, I didn't take action.
Yeah.
That's
Yeah.
where
Well,
that's where the regret
and
is.
listen,
Yeah.
I will be super vulnerable here. We moved here July 1st of 2020, right?
Hmm.
Like right at the height of the shit show. We came from Jersey. And
Hmm.
so makes a lot of sense, right? We could actually like go outside when we came.
Yeah.
It was
Yeah.
great. And we moved sight unseen,
Hmm.
never had stepped foot into like the only time we had been to Florida was to go to Disney.
Okay.
And that was obviously not then. But so we came blindly into St. Johns County, and we know how big that is. My brother lives here. He's in new home sales. So he said, here's the 3 zip codes you should look at,
Mhm.
right? So he gave me 3 zip codes because our 2 youngest were going to high school.
Okay.
So I kind of, I went on Zillow and found a house, and we decided we were going to rent for a year.
Okay.
So we could see where we wanted to be.
Yeah.
Now, house prices at the time were like 250, 300.
The pain.
Like I could have got the house of my dreams
Mhm.
for 300,
Yep.
right? And then the market started going.
Mhm.
And every day in my house, there was this like, should we buy today? Should we wait? Should we
Yep.
buy? Should we wait?
Trying to time
Right?
it.
And my
Yep.
husband's like, because he listens to all the podcasts and all the things. He's like, well, they say you're not supposed to buy it like when the market's climbing, and you're not supposed to buy at the top. And then just when you think it's the top, it's not the top. Newsflash.
Right.
Like
Right.
it's not. And yeah, it
Yeah.
was kind of costly.
They ended up paying a lot more.
We did
You
in
know?
fact end up paying
Yeah,
a
and
lot
that's
more.
not waiting, right? That's not
Yeah.
waiting. Now, to be fair, right? The inverse could happen. You could say, "Oh, it's 250 and I bought it and it went to 125." Wait 10 years.
Right. It's gonna come
Like
back.
as long as you're either not moving or you're willing to put a renter in it, who cares? Just
Yeah.
wait 10 years.
Yeah.
But if you're hey, I'm going to own it for 3 years and sell it, okay, yeah, you're vulnerable,
Mm-hmm.
you know.
Mm-hmm. So one of the things I want to talk to you, because I think a lot of millionaires are created out of real estate.
100%.
I think it's probably one of the most solid, I don't want to say risk-free
It's top
because
3.
nothing's risk-free, but
Yeah.
like I think it's one of the most solid ways that you can become a millionaire.
Yeah.
But I'm also seeing this younger generation who wants to go into their forever home as their first home,
Yes.
right? Like, okay, I remember buying my first house in my 20s, and, I was like, okay, 2,000 square feet, 4 bedrooms, 2.5 baths. Like that was it.
Mm.
But that house now is 3,000 square feet,
Right.
and you need an office, and you want a separate area for the kids, and you want it to be in like the best neighborhood.
Right.
And that puts you in this area in like a $700,000 house minimum.
Right.
So, what do you say to these people? Because
Hmm.
I feel like our parents and the older people that we see out here, like they've upgraded through equity and
Correct.
through real estate.
Correct. You are not your parents. Your parents have worked 10, 20, 30 years to get to the point where they're at and the home that they own and the lifestyle they have. What you need to understand is you haven't, right? And I'm not saying go buy a dump, right? But you need to understand that $800,000 home that you grew up in, like your parents had to go to college. They had to work at the bottom of the barrel at whatever the company they started work with, work their way up over years and years and years to get to that point. Right. And let's be honest, if they bought it 10 years ago, they got it for way cheaper than it is now. There's
Sure.
that factor as well.
Sure.
My advice for young people would be buy yourself a starter home. Be excited about it. I don't want to take that away. Be excited about it.
Yeah.
It is your first home. Live in it for a year or two, rent it out, buy one a little bit bigger, rent it out, buy one a little bit bigger. And then next thing you know, which is different than your parents, what your parents did was they bought one, sold it, took the equity, bought one, sold it, took the equity, and they moved up that way, which is fine too. But could you imagine being 21, 22 years old, and then 10 years later, you own 5 homes?
Right.
And it can be done. And I know it
Yeah.
sounds a little bit off the wall of like, well, how can I even make that work? There are so many tweaks and tips and tricks when it comes to
Yeah.
financing that if you know the rules, you can make that
Yeah,
work.
go deep because it can
Right.
get super
It can get
confusing.
very complicated.
But, like,
Yes.
just on the surface, in theory, you can take the equity from that first house and use it
Sell it
to
and buy the
buy
next
your
one.
next
Yeah.
house and keep the first
Yeah.
house,
You put a
right?
HELOC on
Like,
it
you
or
could do
something
a
like that.
HELOC
Yeah.
or something like that. So, like, there are ways to even make your money work for you in the short term
100%.
with real estate.
100%. And I think at the end of the day, right, if I was a young person right now, I would go buy myself something for $250,000, $300,000.
And that's hard.
That's
It's
still
hard
hard.
here in St. Johns
It's
County.
and you may not be in St. John's, and that's okay.
Right.
But you should be proud. You know, do you know the average age of a first-time home buyer in 2026? 40.
They're not spring chickens.
No, they're 40 years old.
Yeah.
And so if you're a younger person and you can buy a home for 250 grand, 200 grand, 300 grand, A, do it. B, be proud that you are so far ahead of the game just because you bought it,
Yes.
right? Because the average age of a first-time home buyer right now is 40.
Yeah.
So if you're below that and you own a home, whether it's a condo or a mansion, it doesn't matter. You're ahead of the game. Appreciate the win.
Yeah.
And appreciate that even at that stage in your life, you worked hard to earn that.
Yeah.
Yeah. So I would say if you're waiting to buy the $800,000 thing, whatever your thing is, you're missing it. There was a lot of work I started in a 10 by 10 Army barracks. That was my first home.
Yeah.
Right. And I made $1,300 a month.
Yeah.
Right. And now over the years, over 20 years, we've grown. Well, you can't go from here to there overnight. It's just not possible.
Yeah.
Well, you can, but they're going to foreclose on you.
Yeah. I mean,
what's gonna
and I
happen.
think, the thing is, I think that also these, not to like pick on younger people, but things are so different. I mean, there's expenses that they deem requirements that are so extra,
Right.
right? Like,
Right.
whether it's the $7 Starbucks every day, maybe $12 because it's delivered by DoorDash,
Correct.
or the lash extensions, or the injections, or the, the everything. I mean, honestly, at my point in life with 3 grown kids and a solid income and a husband who's got, a pension and everything, I'm like, dang, like, how?
Right. When I think it compounds too with social media, we've created this world where everything's got to be great all the time. And it's got to be the best. And I got to look the best. And it's not, hey, I bought my first home. I bought my first home and it's $1 million, right?
Yes.
Like, and what we don't realize is the images that are being put forth are fake.
Right. That perfect kitchen actually has the dining room like trash piled high.
Right. Exactly.
Yeah.
And
I wish that like we'd show some of that, honestly.
correct. I think I'll argue whoever does is going to blow up on social media, showing the opposite side of it. Because it's the average first time home buyer is 40. So all of the stuff you see on there, it's just not real, but then you create this scenario where you're trying to live up to something that doesn't exist.
Yeah.
Right?
It's really like it's gone beyond girls having to look a certain way because of, the Victoria's Secret models. I mean, we're so far past that because now it's like we all have to try to live our life this certain way, and that's become the standard.
Well, it's like, why are you 22 years old and you don't have a Mercedes yet, right?
Correct.
Like, that doesn't make
Correct.
sense.
Yeah.
Doesn't
Yeah.
well, when I was 22, I think I drove like a Toyota Corolla,
I'm
right?
telling you, so I won't mention any names, but talking to another agent who was just like super braggalicious, all the millions of dollars they've made and all the things, and how, their daughters got brand new BMWs when they
Mhm.
turned 16, and now they're in their 20s and they've never paid a bill in their life. And like, okay, great, but not great.
You're
I
creating a
mean,
liability is what you're
your
doing.
your kid doesn't know how to survive.
Mhm.
I remember having a really hard conversation with our oldest daughter. I guess it was 2 years ago. She's been living on her own since college. She went to Disney and did the
Mhm.
college program,
Okay.
and she didn't want to live in Disney housing. She
Okay.
wanted like her own roommates and her own apartment. And so I was like, okay, cool, you can, but I'm not subsidizing that.
No, yeah.
Like rent wise,
Right.
because that's a decision that you're making. This is available to you. And so that's fine. Now, we kept her car payment, we kept her insurance, we kept her cell phone, right? But then about a year ago, she decided she didn't want a roommate anymore because her roommate was moving out and she wanted her own place,
That's gonna get expensive.
right? So then, like, okay, your payment goes up,
Mhm.
but we were still paying the car and the insurance and the cell phone. And I was like, so if you're grown up enough to make that decision, then you're grown up enough to take this on,
Yep.
And I did it through tears, like in full
It
transparency,
hurts,
right? It
right?
hurts,
Yeah.
but also we have to prepare them for that,
Yep.
you know?
Yep.
It's
My kids are a little younger. They're still at the house. But even that, "Hey, dad, can we buy this?" You sure can. It's coming out of your money, though. It's not my money,
Isn't it funny how
right?
different they look at things?
Oh, the second I'm like, "You're paying for it," they're like, "Oh, never mind.
Yeah, I don't need
I'll
it
pass.
anymore.
Thank you. I'm good on that."
The trip that we went to Disney and we decided to give them like a set amount of money to spend instead of like, hey, I want this and we
Yep.
bought it, things changed so much.
Yeah.
And it's funny how all the kids are different, right? Like one came home with money left
Yep.
because they didn't want to spend it.
Yep.
The other, it was gone on day one.
Yep.
you
Yep.
know?
Just
And I was
burning
like,
that hole.
well, you made that choice.
You know?
So, but you have to learn those things.
Yeah.
So what else? What are other things that people need to know?
Don't ask your lender for real estate advice. Your lender is not a real estate agent.
Your realtor? She's not a
Not a
lender.
lender. Not a lender.
But it's important to have good partners, I think,
Correct.
right?
Correct. So when you're having a conversation with your real estate agent and they're saying, "Hey, this home's worth 500,000. That's about what you should offer on it. We can tweak here and there a little bit, but you should be in that ballpark." Don't ask your lender what they think. Because odds are your lender lends money in multiple different markets and they don't know what the house on 123 Main Street is worth. They can give you a general idea, but they're not going to give you the expert opinion that you're paying for with your real estate agent.
And like your general idea is probably better than Zillow's general idea.
It's better
All
than
right. Well,
Zillow.
I'll give you
Right.
that. But also like those automated values are just that.
Correct.
Like they're not the market. They're not the numbers.
I even have a system for clients that close. And once a month, it'll send them their estimated home value. And it uses like 5 or 6 different parameters to come up with that. And it sends them their equity position and all this kind of stuff. But even in there, it says, if you want an actual market analysis of your home, send me an email and I'll link you up with your real estate agent.
Yeah.
Because no matter how many systems you have, I mean, Zillow got burned on it. They were buying homes left and
Yeah.
right on their estimates and then ended up upside down, right? Ask the local expert.
People love to live and die by Zillow.
Don't do that.
Like
Don't
so
do that.
so here's a funny story because I always say like Zillow is total BS. I have a listing right now in World Golf in Wards Creek where we've been talking about doing some work.
Yeah.
And when I looked at the Zestimate before I met with these folks, Zillow had them as a 4-bedroom, 21 bath home. I was
That's a lot of bathrooms to
"Dang."
clean.
Like
That's
21 bathrooms. That's
Yeah.
pretty impressive. Under 3,000 square feet too.
Wow. It's
21
all
bathrooms.
bathroom. Yeah.
And I was like, if ever there was something to prove that Zillow
Mhm.
does not know what it's talking about, here's what it is.
Well, and I think what people don't understand too is Zillow is nothing more than a lead generation company.
Yeah.
That's all they're doing. They're posting the stuff from the MLSs,
Literally copying it.
copy and paste. They're putting their value on it. They're going to give you a mortgage calculator, which 100% of the time is wrong, to get you to contact Zillow. And then what they do is they take your information that you input and they sell it to people. And then
Oh, you mean they're not calling the listing agent
no,
when you
no,
fill out that form?
no, not at
Huh.
all. They're calling an agent who's going to pay them a couple $1,000s a month for them to send them your name.
Right.
That is how Zillow makes their money. And they do the same thing with lenders.
Yeah, so let's talk about that because I've had more than a few people over the past several months be like, I don't know what happened, but as soon as I applied for my mortgage, my phone started ringing nonstop.
Yep.
So how does that happen? Like,
So
what
trigger
goes on?
leads, but they've now passed legislation to put a stop to it.
Okay.
So trigger leads is this. The credit bureaus are legally allowed, or at least were legally allowed to sell your information. So when I pull your credit as a lender, they get that alert at the credit bureaus, right? That's how we get the scores.
Sure.
What they do is they sell that information, your name, your phone number, the fact that you had a credit pull for a mortgage, to any lender who's willing to cut them a check for that information.
From the credit bureau.
From the credit bureaus. And that is why when that happens, you get 30 phone calls a day. So there's two ways out of it. One is they pass legislation. Two, there's a website called optoutprescreen.com. It's a government website. You can go there, fill out your information. It costs you no money. They're going to ask you for your social and all that, but it is a government website. It's safe. And you're going to opt for a 5-year opt-out. If you do that 2 days before they pull your credit, you'll never have that problem. Well, what happens is I'd have clients mad at me.
Right. Thinking you sold it.
So it's like, why would I sell your information to my competitor? That doesn't make any sense. That makes no sense at all. But so I made it part of my process of like, hey, before I pull this, I want to tell you this. Here's the website. Go do that. Right.
Love that.
Now, there's a catch. Because they've passed legislation to stop it, and that was a huge money generator for the credit bureaus, they have to make money elsewhere.
Okay, so now what are they doing?
They charge significantly more for credit reports. When I first got into the industry, it was about $75 to pull two people's report on a loan. Now it's anywhere between 140 and 180.
So they doubled.
They doubled. So what you will start seeing is lenders will start requiring the borrowers to pay for their credit reports up front. They'll send them the link for the borrower to pay. Mathematically, if you pull credit on 4 people to try to do a loan, you'll close 1.
And so let's use $150 for round numbers.
$450. Because the 4th one, the one that closes, they'll reimburse you at closing.
Okay. But so you're out
$450 for every closing. So there's 2 ways to combat that. One is lenders who don't have the clients pay up front, they'll find ways to kind of bake that in, right? So if you do close, in some way, shape, or form, you're paying for that, for the people who didn't close. Because on a small operation, right, if you have 100 closings, that's $45,000 in credit reports for the year, because there's 300 that didn't. Right. That's $45,000 in credit reports you absorbed. You can't afford to absorb that. You have to shift it in some way, shape, or form. Mm-hmm. So what you'll start seeing now is lenders and brokers and all that having the client pay for the pool up front. It's not a bad thing because I don't believe in socialism. I don't believe you should have to pay for those 3 people's credit reports, right? So you'll start seeing that. And then other ones will stick with, hey, yeah, we'll just pull it up front. Don't worry about it. So you'll start seeing that, but it's because the credit reports have it's other than employees, it's one of the top 2 or 3 expenses of running a mortgage company.
Wow.
Is credit reports.
Wow. And I guess, like, I don't think that's a bad thing. So let's talk about someone like you, right? Because you're a broker. So you're not just shopping one rate.
No.
Though. So if someone is working with you and they're filling out a mortgage application, how many different rates and banks and stuff are you looking at?
I've got 30.
Wow.
So what I can do is we'll take their application in our system. And in that system, I can shop 30 different lenders.
Without them having talked to 30 different people.
Correct. And without 30 different credit pulls.
Right.
So I can shop around to 30 different lenders, which is very helpful.
Yeah.
And also what you'll find is rates aside, lenders are different. Right. So if you call me and you're like, hey, I've got this thing that's falling through, we got to close in 2 weeks. there's certain lenders I will not send that deal to because I know that's not going to
Can't get it
happen. Right. And there's certain lenders I will send it to because I know they can pull it off.
done.
Right.
Right.
And so there's also flexibility on the broker side of how are we meeting the client's needs? Are we doing a 60-day refi? Go to the ultimate cheapest lender. It doesn't matter. Right. Are we doing a 2-week purchase? Well, maybe you're going to have to pay an extra quarter, but at least we can get it done. Right. So it gives you, and the programs, right? You think of it and we probably have it. And if we don't have it, I can call a lender and get it,
And get it.
you know?
So talking about time,
Mhm.
I know average on the real estate side is we say like 30 days
30
to
days. Yeah.
close, right? But I've seen it done in 20.
I can do 10.
I've done 45. So the lowest, what's the lowest clear to close you've
So
done?
10 legally from start to finish, it's got to be at least 7
Okay.
because you cannot close on a loan until 7 days have passed from the initial closing disclosure being signed. So you can't do any less than 7.
Okay.
I've done 10.
Okay.
So, and mind you,
Now
clean
the
file.
client has to also be a gazillion percent cooperative.
Well, and I
Right.
preface this as, hey,
Like-
we'll get this done. But when my people call you, it's not, hey, I'll get it to you tomorrow. It's, hey, I'll get it to you in 2 hours.
I'm gonna stop what I'm doing.
Right.
I'm gonna get you what you
Right.
need.
And then we can pull that off. If it's a highly complicated file, if it's, I own multiple businesses and have 15 different rental properties, that's not going to get done in 10. But, if it's a clean, hey, I've got a W-2 borrower that they're paying a good chunk of money down, they got a decent credit score, yeah, you can do that.
Okay. So we talked about, you just mentioned complicated. I think we live in a world where, I don't know if this is statistically true, that we have probably the highest number of self-employed people
Mhm.
that we may have ever seen. I mean,
Mm-hmm.
people are influencers and they have TikTok shops
Yep.
and, they're self-employed. Like it's easy these days to do something on your phone and make
Correct.
money,
Correct.
right?
Yeah.
Maybe it's feet finders.
Hey, I mean, you do what you got to do, right?
I mean, listen,
I don't have the feet for them, but
I like to keep options open, so, we haven't been there, bless, but how do you handle that?
Well, I'm self-employed.
Right?
So I'm
As
well
am I.
versed in it,
Yeah.
right? So I'm very well versed in it. So there's different methods of being self-employed. The most basic is going to be your sole proprietor or your Schedule C, like an LLC. There's literally a worksheet. You just type it in. It's very easy. As you get more complicated with maybe S corps, C corps, all of that, there's calculators we use. And if it gets super highly complicated, I'll do what's called a TBD underwrite. And so what I'll do is before you even go under contract, most pre-approvals are the loan officer is looking at the numbers and saying, yeah, you're good for this, right? It hasn't gone to an underwriter. And there's an automated underwriting system that you run that says, if the information you put in the system is correct, this loan will close.
Okay.
Where the problems come, and it's just a side note, where loans fall out is the information you put in the system wasn't correct, right? Now you got yourself
Which
a
could
problem.
be for a million reasons,
Million
right?
reasons,
Like
million
someone
reasons.
may not have given you
Yeah, hence the
nothing
reason.
but the truth.
Well, right. Hence the reason you want to collect documents up front. You don't just want to take an application. So whole nother thing, pre-qual, pre-approval.
Yeah.
You want pre-approval with the documents. But if it's a highly complicated file, I've got a bunch of rental properties, I've got 3 S corps, whatever it is, I'll just package it up and submit it to an underwriter like you're already under contract. And that underwriter will come back and say, hey, this is what their income is.
Okay.
And the lender has to stick to it once they do that. They can't change it. So if it's super complicated, I'll just say, hey, look, we're going to send it to this lender. You're going to get disclosures and everything like you're under contract. It'll say TBD because you don't have an address. And then once you go under contract, all we do is change the TBD to the address. And so another advantage when it comes to speed is if I know hey, I'm moving down in 1 month. I need to find a house. I need to close, but I'm not going to go see Amy for another week. Cool. Let's put you in underwriting now. Right?
So you're locked.
You're already locked.
Basically.
Like your rate's not locked, right?
Right. But like your approval.
You've already
solid.
underwrote the income and the assets.
Yeah.
All that's left is the home, the appraisal, right? So it can speed it up. But for the highly, highly complicated self-employed, which to be fair is rather rare,
Right.
we'll just submit it up and let the underwriters tell us what it is. Everything else, we'll calculate it right there in-house. We have worksheets that we go through and put all the numbers together.
Okay. Well, I think like in the future,
Mhm.
I want to have some conversations about, income and self-employed people, because
Yep.
I think it's helpful, because I learned some things the other day about paying certain things out of certain accounts to make it
Mhm.
better for
Yep.
mortgage qualification
Yep.
purposes.
Yep.
I don't want to muddy that today
Yep.
because it is complicated, I think.
Yep. Well, I'll tell you this though, with self-employed, right? One of the biggest problems with self-employed people is they like to write their income off in deductions.
Well, right.
Makes
Yeah,
sense,
because
right? I don't want to pay taxes, right?
right.
I want to pay
Yeah.
what I owe, right? In case the IRS is watching this,
Right,
I
right.
want to pay what I
Well,
owe,
right, because
right?
we take a reasonable salary,
Right,
right?
right,
Like,
exactly. But what you can do, there's other programs if you write off a lot, like there's P&L loans where they don't look at your tax returns. They just look at your P&L for the past 2 years. And there's bank statement loans. So
now the rates are a little higher though,
they are a
right?
little higher, and you're
Okay.
typically going to have to do 20% down,
Okay. Because you're a little riskier.
right? But most self-employed people have that.
Right.
And at the end of the deal, if your rate's a percent higher, but you just save 30 grand on your taxes, take the win, right? Take
Right.
the win.
Right.
But like you'd be a great example, right? For a bank statement loan, they would just look at the deposits from your closings,
Yeah.
and they're going to give you a percentage of that, depending on
Okay.
what industry you're in. That's going to be your income.
Yeah.
And it's that simple.
Right. Because for someone like me, right, it might be, 1 month is
Huge.
fantastic,
One
and
month.
then there might
Yeah,
not be a deposit for the
correct.
next month, right?
Correct.
So
And
it's,
so they'll do it. They'll have 12-month and 24-month bank statement,
yeah.
12-month and 24-month P&L, and they'll average it out.
Yeah.
And the only, I think, different requirement on those would be they typically want more reserves.
Mm-hmm.
So after you close, they want a
So you
little
can
more money
cover
in the
it.
bank,
Sure.
right?
Yeah. Yeah. Makes sense.
So,
Makes sense. All right. Well, I think this was pretty helpful.
okay.
Okay, Lance, I have one final question. What's one thing you wish that homeowners knew before they needed you?
I wish that they knew before they needed me. I wish they could narrow down their goals.
How so?
Well, it's my job to help you meet them
Okay.
on the financial side of things,
Right.
but I can't help you meet goals that you don't know about, right?
Right.
And so what I'll find is I'll get calls a lot with, well, I want to do this and I want to do that and I want to do this. And it's like, well, we need to narrow down what you want to do because I can't help you. And your real estate agent can't help you, right? Unless you're truly narrowed down on what you want. So what I'll have clients do sometime is, hey, fill out the application. But as you're doing this, I want you and your significant other, or you, if it's just you, to actually take some time and sit down and think about what do you want, right? Because I can't help you unless you know what you want. Because I think what happens is it kind of convolutes the process because we'll be working towards one avenue and then everything changes, right? Now, you probably see it with, hey, I want to move to Florida and I don't know if I want to live in Orlando or St. John's or Tampa. And it's like, well, I can't help you, right? Unless you know what you want. Most people have a general idea. Hey, I want to buy a house. I want to do a refi. Okay, but what does that mean? Do you want to buy a single family home to raise your kids in? Do you want to downsize? What is it that you want? And then I think another thing I wish they knew, and this is big for me lately, is AI is not gospel.
What? Come on.
AI is not gospel. So yes, I will have clients tell me what AI says, and I'll say, okay, well, let me tell you why that's wrong.
Right.
And I had a great example. I had a client the other day. He was deciding between an FHA loan and a conventional loan. The conventional loan was about 1% higher on the interest rate, but he wanted to waive his escrows because AI told him he could invest his escrows and make
Oh.
money on those. I'm like, okay, all right. And I always preface, I will do whatever you want, but I want to advise you first. And then you tell me what you want and I'll do it. I said, all right, so if your escrows are about 15 grand a year, but remember, you're not going to have 15 grand in that account all year because they get paid and then it rebuilds,
Right.
right? But for easy calculations, we're at 15 grand a year. How much money are you going to make on that $15,000 return every year? And he's like, I could probably get, if I do well, 10%. Okay, cool. You're going to make $1,500. That's great. How much more is your mortgage payment at 1% higher? $3,600 a year. So you're going to write an $1,100 or $2,100 check to waive your escrow so you can invest them. and then jack your interest rate up 1% on your loan,
So
right?
crazy.
So, but ChatGPT was like, oh, no, tell your lender you want to do this. AI is not gospel. It's not.
It doesn't like it doesn't have reasoning.
No, it doesn't. And they should also know when you text your lender with a list of 100 AI questions. It's not that they don't want to answer your questions. They'd rather have a real conversation. I think that is another thing is a lot of people view lenders as commodities. Hey, just answer my questions. What's the number? And they don't realize there's actually a lot of value and insight we can provide.
Yeah.
I've saved people a lot of money by structuring their loan a certain way, other than the way that they wanted it structured. Now,
Mhm.
obviously per conversation.
Sure, sure.
And so I wish they would understand that, hey, we're not here just to give you an interest rate. Like we can actually save you a ton of money over time.
And I think that's the importance of working with someone local,
Mm.
someone that your agent knows,
Mhm.
has a relationship with, instead of like, well, I went online and Rocket Loans, or even, even big banks, right? Chase or, Navy Fed, or there's a bunch of things, but they're very specific. I'm not saying
Yep.
they're never the right product,
No, they're not.
but,
When people don't realize too, when you're kind of talking about comparing lenders, buyers are really trained to ask one question. What's my
what's the
interest
rate?
rate? Right? And that while that is a very valid question and needs to be asked, that is not the only question that should be asked.
Yeah.
The other two questions, because lenders have three charges, not one, but buyers only know about one. The second question you ask is, what's the discount points? How much money extra on top of my normal closing cost am I paying for that interest rate? And then the third question is, what are your origination charges? And an example is, if I have a rate of 6 and another lender has a rate of 6, you think we're even. But if they're charging you $5,000 for that rate and 3,000 for origination, and I'm not charging you for that rate and my origination's 1,000, how much more money did you just pay for the same interest rate?
Right.
And what you'll see is when a lender realizes that you're shopping, and we're not dumb, we know you are. I'm not saying it's a bad thing, but we know when you're shopping. Lenders are going to lowball your interest rate because they know that's all you know to look at, and
And then you're paying for it somewhere
you're
else.
paying for it someone else. So, and then you'll go back to the original and say, "Well, he's got me 0.5% lower." Does he?
Right.
Probably not.
Yeah. Yeah. Bring me the
Right.
bring me the
Bring me the loan estimate, and I'll
uh-huh.
tear it apart
And
every
we'll
time.
see. Yeah.
Yep. Because within reason, all lenders are going to be about the
About.
same. You might get an
Right.
eighth or a quarter either direction,
Right.
but they're all going to be about the same. And so if you have one that's a complete outlier, question it. It
Right.
may be true. Odds are it's not,
Mm.
but question it.
Yeah. Well, and I think it's important that I know with you, it doesn't end when they close,
Correct.
right? Like you're not done.
No.
I have
Mm-mm.
clients who will be like, I know we closed. I'm sorry to bother you. And I'm like, no, like just because we closed, we're not done,
Correct.
right? You're still my customer.
I had a client call me today out of Texas, and she called me because they said that the county owned half payment of their taxes because it was a husband and wife and they only took her half. And I was like, that makes no sense at all. That's not, there's no way that's true. Let's pull it up and look real quick. So we went to the county website, and for some reason, the county has their property listed twice under two different accounts. And so what I did was I downloaded that information, sent it to her, and said, hey, you need to call this number and tell them they need to delete one of, they're
Take
charging you
care of it.
twice is the problem. So no, like closing does not mean the end of a relationship. I think
Right.
it's the beginning,
Right.
because hopefully by the time we get to closing, I'm the same thing with you. By the time you close your clients, I feel like they trust you.
Yeah.
Right. And so now we've actually built the trust, and you can come back and ask questions, even if we're not buying and selling and doing loans, it doesn't matter.
Yeah.
I
Yeah.
think that's huge.
Yeah. I mean, I say all the time, like the very least thing that I do is sell houses.
100%.
I mean, like, and it's so funny because it's so convoluted what people think realtors do.
Hmm.
And myself included 4 years ago, right? I was
Yeah.
like, yeah, this would be fun. Like,
It'll be great. I'll
see
go look at
houses, blah,
houses.
da,
And,
da.
yeah.
Yeah, yeah.
Uh-huh.
Then I was like, wow, gee, I feel like I earned my doctorate in psychology.
Uh-huh.
I'm definitely like sometimes a life coach, a marriage counselor,
Hmm.
all the things. And oh yeah, by the way, let's buy a house.
Yeah, let's buy a house off that, you know?
You
You know?
know?
We can do that too,
Yeah,
you know?
negotiator extraordinaire,
Yep.
know all the things, save all the deals.
Oh, 100%.
Yeah,
I think that's what kinda makes it fun though, right? Is like because you get to learn about people. Like I know my job's money and finance, whatever, right? No, let's be honest. No one cares about mortgages unless you're in a 30-day window where you need a
right.
mortgage. Other
Yeah,
than that,
and
you
then,
don't
like,
care.
who cares?
Right,
Yeah, for
exactly.
real.
People at least care about real estate when they're not buying
Oh, yeah.
houses, right? But what's cool is getting to meet the different people from the different backgrounds and the different
Yeah,
scenarios and learning about them. That's for me, that's one of the best parts is,
the
oh,
relationships.
yeah. It's like, oh, you came from here and you're moving here and you spent 30 years in the military. Like
Yeah,
I don't know, it's cool learning about people,
yeah.
you know?
I like it. I like
Yeah.
it. I said I did a social media, like, story last week, and I was like, "Man, I have done a lot of things in my life, and I've worked really hard.
Mm.
I've never freaking worked harder." Like, ever, never
No.
worked harder. Like, it is the most exhausting and exhilarating thing that I've ever done. Sometimes all in one day.
It can't like within the
Like
hour, you can be like, "Oh,
like,
everything is great." Oh god.
and you're, like,
You know?
crashed out. Yeah.
Uh-huh.
Yeah, for real.
Yes,
And
definitely.
then you're flying high again.
Yeah.
So,
Yeah. I think that's that ADHD dopamine hit though when it's good, it's good, you know?
oh, for sure, for
Yeah.
sure. Yeah.
Good.
This is actually a good field for us ADHDers.
Yes.
Like, 'cause you
Yes.
can be a squirrel.
Yes. I don't know how many conversations I've had with my wife of like, just burn it all to the ground. It's not working. Just burn it all.
Right.
And then literally 2 days later, I'm like, we're crushing it.
Yeah, yeah.
It's so funny.
So good. Or
Yeah.
I'll be like, "Man, that like last month," and I'm like, "Oh shoot, that was yesterday."
Uh-huh.
Right? Like
Huh.
so much happens.
100%.
So,
100%.
well, thanks for sitting down.
Thank you.
Let's do this some more.
Yeah, definitely.
And I like it. And if anyone has any questions, let's maybe pay attention to that too, and we can answer questions.
Yeah, yeah, definitely.
So,
Definitely. I like it.
cool.
Awesome.
Thank you.
Thank you.
All right.